We're turning to the charts this morning to tell us the story of where we are and where we could be going. Joining me now is Craig Johnson over at Piper Jaffray. So good to have you here in studio this time around, Craig. And we got a telestrator for you so you can draw on these charts to tell us what exactly is happening. So with the S&P 500, I mean, we're near record highs here.
Yes.
Where do we go from here?
So, Dom, that's a great question, and we made it through the floods to get here today with all the rains in New York. But as we can see that we had broken out to these new highs right through here, and sitting here at just at 29.85, as we had broken out, we're running into some interesting challenges, Dom. Number one, we're not seeing as many new highs as we're seeing new lows starting to happen in the market. Last week, we did see a MACD, or this week, we're seeing a MACD sell signal, and also we're starting to see...
That's a measure of relative strength or momentum.
Correct.
Right? In that
and
point.
We're seeing some, we define it as waning momentum in the market between MACD and RSI. So as we look at the overall market in here, I would not be surprised. This is really going to be the key line in the sand for this market, is about 29.50, 29.40. Any sort of break back below that level is going to suggest to us that we're seeing a setup in this market that could be very similar to what we'd seen in the fall. And so from my perspective, I think we got to be a little bit more cautious in here with this waning momentum at this point in time, because I think this market is probably going to set up for some sort of correction. And Tom, let me just also add...
How deep does it go if it does happen?
We could correct all the way back toward the 200-day moving average, which could get you back toward about 27.78. So certainly a meaningful correction that I think investors need to be aware of. I'd also just add to this discussion in terms of the overall S&P 500, you're not seeing as many mid and small cap stocks participating in this advance too. Now, some say that's not a problem. I think that's a concern. I want to see more breadth. When the breadth of this market has been as narrow as it is, we had seen this in the fall, we had seen this happening in January of 2018, and we did see a correction.
All right, let's talk about a couple stocks in particular. First of all, let's look at a couple breakouts. You're saying right now that this stock could be poised. We put it as a mystery chart before. These are shares right now of Akamai that are coming up right now. This is one of the mystery charts. So take us through where we think we go with Akamai from here.
So from my perspective, first and foremost, the longer-term uptrend still remains intact. But what I've been watching is this kind of base that's been forming in here, and now we're starting to break out to new highs. And as we break out the new highs here on Akamai, I would say that this is a stock that's probably got upside to probably about the $100 level on this kind of big breakout in here. So again, constructive chart, and clearly a key player for the overall content delivery on the internet.
All right, so Akamai's one, and the other mystery chart we have here is what's happening with Under Armour, right? That's our other chart here. So where do we go with Under Armour?
So Under Armour, the longer term, I look at this entire price action through here as kind of one big consolidation that we've been doing. It's been an out-of-favor brand for quite some time, but it's finally starting to work, and we're starting to put in these higher highs and higher lows that we've been having in here. So from my perspective, this is a stock that could move its way up into the mid-30s fairly easily. It's not a very loved stock at this point in time. And all I continue to hear about is challenges with Under Armour, but they seem to be on the mend. And I can see that price action happening in the chart through the price action over the last several months in here, Dom.